All right, gang, we're now going to take a look at some of the concepts of a review. And now we're going to compare it, which gives limited assurance, to the audit. They do seem somewhat similar. A lot of similarities, so we want to make sure you're familiar with those differences that might be challenging on the CPA exam so that you'll crush it. Let's begin. When we're dealing with a review, remember we had in our textbook, we had you, liar, CPA. We had to understand the client. We had to learn and understand the business. We had to make inquiries, an analytical review, and then we had a review of other procedures. We had the client rep letter, which was required. We exercised professional judgment, and then we communicate the results in a report. Well, what we're going to start with now is Riverside Fine Foods has been engaging Becker to perform an audit annually due to a bank covenant requirement. During the year, though, Riverside paid off the debt. So now there's no requirement for an audit. Bridget, the owner of Riverside Fine Foods, calls Donna Partner of Becker CPA and indicates that she is interested in having the Becker engagement team come out again this year. But she was wondering what other options there would be now that the audit is not required. Well, we have lots of different options. First of all, let's take a look. We'll set up and we have a review and an audit as the starting point. And let's chat about the types of procedures that there are. Well, in this case, we're going to start with, we have inquiries and analytical procedures that will be done in a review, while in an audit, you'll do all the field work, confirmation, observation, reconciliations, vouch, trace. You'll do all those steps. You'll test internal control. The level of assurance that we're going to have, well, it's limited in a review, right? We just give limited assurance. While in an audit, we give reasonable assurance. What about the overall results? The overall results, we have a conclusion in a review. We have an opinion in an audit. How about an understanding of internal control? Absolutely none. And by the way, that's one of the big tricks that we've seen in the past. You're doing a review and they say, which of the following steps should you do? And they usually put up front, you should test internal control to determine its effectiveness. No, you don't. That's the step you do in an audit, not in a review. Is independence required? Absolutely, in both a review and an audit, since you're giving assurance, whether it be limited or reasonable, you must be objective, and that requires independence. Is an engagement letter required? It's required in all services. Even go back to the compilation and the preparation. Notice the engagement letter is always going to be part of it. Are you allowed to use the special purpose framework? The answer is yes. Obviously, you would adjust some of the terminology in your report if a special framework is used, like the cash method or the tax method, etc. What about risk-based approach followed? And the answer is yes. We're always concerned about that process, so it will be applied in both a review and in an audit. Is a management rep letter required? Absolutely, in both. Think of that as being one of the inquiries of management in a review. You want to make sure that they've told you the truth, the whole truth, and nothing but the truth. And of course, always in an audit, you want that kind of paperwork. And what about the report issued? Well, as we said, the report issued, yes, we're giving a limited assurance report in a review. We're giving a reasonable assurance opinion in the other one. And you'll note here that there are some differences, and I'm highlighting those up here in the top, and then there are some similarities which are down below. Hopefully this helps in understanding, comparing, and contrasting the items, and now you're ready to try an exercise.